All right, guys, we're going to be doing something that's called phasing analysis, and this time on one of the markets that I used to trade the most, the S&P 500. Now, if you don't know, phasing analysis basically means you're finding all the cycles. Phasing a cycle means you're finding all the highs and lows for a cycle. Now, before I move on, let me clarify a few things. This is not going to be an exhaustive analysis on the stock market. Rather, the objective is to give you just an overall view of how I would phase the US stock index or the US stock market. The main purpose here is just to show you how we apply the theory that we learned in previous lessons and apply it to a real live market. So what you're seeing now on the screen is a monthly chart of the S&P 500. Now, most of this lesson is going to be based on the price action after 2008. Going to be after this vertical dashed line, which is the March 2009 low following the 2008 global financial crisis. The reason for that is a few things have changed in the stock market in the aftermath of the 2008 crash. Some of the cycles that used to be important in the past are not so relevant anymore. And so I'm going to be sharing some tips and tricks that relate specifically to the post-2008 action, but the price action that came before is not really that different. Now, the first thing we're going to do, and the first thing you should do in any market when you're studying it for the first time, is to find the cycles that matter the most. The most important cycles for the stock market are the 54-month cycle, the 18-month cycle, and the 20-week or 140-day cycle. Now, I call it a 20-week cycle because I don't want to generate any confusion. It's 140 calendar days or 100 trading days. In the case of the stock market, we're really looking at a 100 trading day cycle, not a 140 calendar day cycle. This is why I prefer to refer to this one as a 20-week cycle, just to avoid any confusion. The 20-week cycle, by the way, is quite important in traditional assets. It's the one cycle that I've found to be pretty consistent across most markets is a 20-week cycle, the 100 calendar day cycle.